Hello everyone and welcome back to the channel. In today's video, we will analyze the outlook for gold for the week from August 3rd to August 8th. Gold is currently trading inside a triangle pattern formed by a descending resistance line above and a rising support line below. As price moves closer to the end of the triangle, volatility is becoming smaller. This suggests that the market is consolidating and may be preparing for a strong breakout. The main question for next week is, will gold break higher and move toward the supply zone above, or will it break lower and return to the major support zone? Let's take a closer look. From the broader perspective, gold has not established a clear direction yet. On the upside, price continues to form lower highs. This shows that sellers are still defending the descending trend line. On the downside, price is also creating higher lows. This tells us that buyers are gradually raising their defensive area. As the two trend lines move closer together, they form a symmetrical triangle. Gold is currently trading around 4,045, which is close to the final section of the pattern. For this reason, this is not an ideal location to predict the direction in advance. A safer approach is to wait for price to break out of the triangle and then observe how it reacts when it retests the broken area. On the upside, the main supply zone is located between 4,130 and 4,145. This area combines an order block with liquidity. During the previous test, gold was strongly rejected from this zone. Therefore, if price returns to this area, buyers will need strong momentum to push the market higher. On the upside, the main supply zone is located between 4,130 and 4,145. This area combines an order block with liquidity. During the previous test, gold was strongly rejected from this zone. Therefore, if price returns to this area, buyers will need strong momentum to push the market higher. Next week includes several US economic reports that may create strong volatility in gold. Early in the week, traders will focus on US manufacturing data, trade figures, factory orders, and services sector data. The most important event of the week will be the US employment report on Friday, August 7. If the economic and employment data are stronger than expected, the US dollar and Treasury yields may receive support. This could place additional pressure on gold. On the other hand, weaker than expected data may increase expectations for softer monetary policy and support gold prices. Traders should not predict the market reaction based only on the headline number. It is better to wait for price action to confirm the direction after the data is released. The first scenario is a bullish breakout above the triangle's descending resistance line. To confirm this setup, gold needs to close a clear 1-hour candle above the trend line. After the breakout, price may return to retest the broken resistance. If the retest holds and gold does not fall back inside the triangle, we may look for a buying opportunity. The first target will be around 4,100. The next target will be the order block and liquidity zone between 4,130 and 4,145. As price approaches this supply zone, traders should consider protecting their profits. If strong rejection appears, gold may return to consolidation or begin another decline. However, if price breaks completely above the supply zone and holds above it, the bullish trend may continue. The second scenario is for gold to be rejected from the descending resistance line and break below the rising support line. If price closes a 1-hour candle, below the lower side of the triangle and fails to move back inside the pattern, selling pressure may increase. In this case, gold could move toward 4,000, followed by the main support zone between 3,980. This is an area where buyers may return to the market. However, traders should not buy immediately when price reaches support. It is better to wait for a liquidity sweep, a bullish reversal signal, and a break of structure on the lower time frame. If this support zone is also broken with strong momentum, the bullish structure below will fail, and the risk of a deeper decline will increase. My trading plan for next week is relatively simple. While gold remains inside the triangle, I will prefer to stay out of the market. If price breaks higher, I will wait for a retest before looking for a buying opportunity. If price breaks lower, I will wait for a pullback toward the lower side of the triangle before considering a sell position. Traders should avoid entering immediately on the breakout candle because it could be a false breakout designed to sweep liquidity. Market volatility may also increase significantly around major US economic releases. For that reason, traders should reduce position size, avoid excessive leverage, and never hold a position without a clearly defined stop loss. To summarize, gold is currently consolidating inside a triangle pattern and has not yet established a clear direction. The main supply zone above is located between 4,130 and 4,145. The main support zone below is located between 3,980. If price breaks higher and successfully retests the breakout area, gold may continue toward the supply zone. If price breaks lower and fails to return inside the triangle, the market may decline toward the major support area below. Next week includes several important economic releases, so the main priority should be waiting for confirmation and managing risk carefully. Everything discussed in this video is for educational purposes and represents my personal market view. It is not financial or investment advice. Thank you. Remember to like the video, subscribe to the channel, and leave a comment telling me whether you expect a bullish or bearish breakout. Thank you, and I will see you in the next video.